So open banking is something where bank share their data, product and services with external partner by the means of API. API is application programming interface. It's a tool, it's basically a messaging which goes in a data form from one system to another. So earlier it used to be within bank, where bank used to share information with say branches, ATM, or if you have a mobile app, right? It was all internal within bank. The same information which is being exchanged was within banking ecosystem, but now when you are sharing data with external partners, with fintechs, then it becomes open APIs, where you are exchanging with them which are not within bank ecosystem. So open banking is based on APIs. API had been, like I already told, like API had been there for ages with banking, but it was only within banking ecosystem. So it's only when banks started partnering with the external world, with fintechs, and that is mainly to improve their operational efficiency or to increase their customer reach, where they thought instead of building some technology themselves internally, rather we should partner with external world, external vendor who is expert in that. So that is how this journey towards open banking started. So in the last 3 years, we have seen banks really coming forward and exploring these options of exposing APIs. Last year, we released the same numbers in AFS. Around 35%, 40% banks progressed with open banking. And this year, 19, we are expecting 60% of banks across Asia Pacific to progress. From a regulator point of view, also, we have seen Singapore, Australia, Hong Kong have already released their initial draft around guidelines on open banking. And if you look at other part of the world, Asia Pacific, India, South Korea, New Zealand are expected to come out with their guidelines in next 12 to 18 months, which to be fast followed or adopted by Malaysia and Thailand. And then in next 24 months, we will see countries with huge potential such as Japan and China to come out with their first draft. Regulators are understanding, they are aware that they have to progress, they have to come out with the clarity to banks when it comes to sharing data. So for regulators, it is not so much about APIs or open banking, it is about how, in what form can you share data and how will you still protect customer privacy and their data. So I partially agree with that. Yes, it does favor fintechs and external partners, but it also favors bank at the same time. So if I look at fintechs or third parties, of course they are building some software, some technology, and somebody has to buy it. And who other than a bank, right? So for them, bank is a customer. Now if you look at the bank perspective, for a bank, if they want to, for example, they want to start a blockchain technology, adapt to that, or they want to start with RPA, still they look for somebody who is expert in that, and then they learn from them and adapt to that technology rather than building it themselves. So for bank, it becomes an easy way to adapt or move to be agile in terms of adoption of any new form of technology with the help of these external vendors or fintechs, especially in payments. Payments we have seen growing extensively when you talk about NFC, near field communication, or you're talking about Bluetooth enabled technology. Everywhere fintechs are the one who are providing technology to banks. So of course it becomes economical for banks and an opportunity for fintechs to grow. Yes, they do understand. So the way we see is the knowledge or the awareness about open banking has grown tremendously over the previous 2 years. So right now, like I already mentioned, that 60% of banks will progress. So 60% are already taking a step towards open banking. Another 40% are not like they are not thinking about it. They are preparing. Maybe they're taking by 2020, we're expecting 80% of banks to progress. So of course, the 20% which are remaining are probably will become insignificant with time, or they will merge with the larger banks. So ultimately, everybody who is into banking fraternity or financial services will have to explore open banking or open APIs. So there's no way backward where you can say, okay, I can still survive in future without going open. You cannot. So if I take an example, for example, Maybank, right? Maybank has tie-up with Western Union for cross-border transfers. So Maybank itself is contributes to 65% approximately of mobile users in Malaysia. and they, instead of building a platform for say cross-border transfer, they thought it's better to tie up with the Western Union and use their network to do that. So right now, if you are a Maybank customer, you can download an app, and from that app you can send a request to a Western Union for money exchange, and you can do a transaction in 200 plus foreign currencies. For example, ICBC in China, they have a tie-up with JD Finance, where they are not only using JD Finance technology and their expertise, they're also using their logistic wing to actually, so in case you are depositing and you want a deposit slip from a ICBC, so JD Logistics will send that receipt at your home. So if you talk about whether this is merely prominent in smaller banks or new age banks, I'd say no. Each and every bank has understood, realized the importance of this, and they are doing their bit. Maybe somebody's taking bigger steps when they have less risk, when the banks are new. And if I talk about incumbent banks, traditional banks, they are going slow. I agree, they are not going like exceptionally well, where they are like really going all out, collaborating with anybody who comes in. But yes, they are exploring big time, and they understand if they don't do it, today they are traditional, tomorrow they will be over. Before 19, we have seen maximum adoption of open APIs or open banking was in a retail segment of customers. But in 19, you will see corporate banking will also expand their horizon and come out with a wider corporate banking based API plan, where they will offer access to transaction banking processes. In fact, as per IDC, we have estimated that 1 out of every 10 Tier 1 and Tier 2 bank will offer at least 3 corporate banking based APIs by the end of 2020. And we have also released 20 common APIs which will be in demand in corporate segment. So if we see that retail banking has already, where we have seen a lot of use cases happening, where people are exploring, doing a lot of innovation in payments. Now 19 will be the year when you will see a lot of movement or development happening in the corporate banking side. When you are designing your APIs, design from a point of view that you understand that API is not a technology, it's a product, and treat it like a product, where you have to keep updating that API as per the market demand, as per the user demand. It is not like you have made one API and it will remain like that for like next 10 years. APIs need to be keep evolved, and you have to keep updating as per the changing market requirement, changing customer requirement, vendor requirement. That is the first thing I advise to bank, because bank, as long as it is only with IT team to develop API and manage these, it's not going to be a successful project. Unless they bring all the teams together, whether it is IT, marketing, analyticals, or product team, all have to work together to treat it like a product and make a API product supply life cycle. Next, banks need to understand when they are exposing API, and if they are fearful, where should I start? We suggest you should start with your friends and family first, with your close business associates. It may be your customer who is already having a relationship with you and they have a very innovative technology. Try exploring with them rather than going all out if you are not sure.